Well, as we've been saying, 2013 was a record year for the markets in so many different ways. It was also a year of some high-flying stocks. Take a look at some of these returns. Netflix, 300% return. Best Buy and Micron rallying about 250%. Celgene racking up gains of 116%. Hewlett-Packard gaining just about 100%. Will any of these names keep that momentum going next year? With us now, Jeff Reeves, InvestorPlace.com editor. Jeff, great to see you. Let's start with Netflix, Jeff. You know, you're a better man than I am. I got to tell you, you admit when you're wrong. And Netflix, you didn't think, when this year started out, 2013, you didn't have a lot of hope for Netflix, did you?
No, I mean, I was one of these people who kind of thought that it was overvalued, that there was a lot that could go wrong. People were expecting perfection. But I think one of the narratives that investors need to pay attention to in 2013 was valuation didn't matter as much as pundits like me really thought it did. This really was about multiple expansion and people buying into growth. And Netflix has growth in spades. I mean, it won an Emmy Award for its original programming. There is still programming costs that are kind of weighing it down, but it's growing briskly overseas, 20% revenue growth year over year over year. There's not a lot of growth out there right now with a lot of companies just propping up the bottom line with buybacks. So Netflix actually is a true growth story, and Wall Street got behind it this year.
But I got three words for Netflix: future cash flow. You got to have a belief that their future cash flow is going to be much more than it is now, right?
Yeah, I mean, the one thing about their international expansion is that it's not profitable at all. They're just burning money trying to build out. And this is the model that you've seen in a lot of tech stocks lately, like Amazon. You don't have that much money that you're making off of it, but the expectation is eventually it's going to be there. Right now, as I've said, there are valuation concerns that you're going to get that money down the road somewhere, but investors seem that they're buying it. And if you look at the subscriber growth that Netflix has had, even in the face of all the competition, I think it's reasonable to expect them to go somewhere with this. I don't think it's going to run into a wall and it's going to fall off a cliff. I'm actually pretty bullish on Netflix next year, too.
Okay, good stuff. Hewlett-Packard, 100%. That's no piker. Nice earnings over the 2013 season. A lot of people say, though, the tech has had its run-up, and that's about as far as it's going to go. What do you say?
Yeah, I mean, it's funny because Hewlett-Packard is kind of the other side of the equation that, it's kind of been battered down. There's this turnaround story where a lot of people don't know if it's actually turning around. Revenue is still under pressure. But right now, Hewlett-Packard, as opposed to Netflix, that has a nosebleed forward PE of 100, the PE of Hewlett-Packard is only 7.5. It only pays out 16% of its earnings in the form of dividends. So there's huge potential for dividend growth there. It's fairly valued on a forward earnings basis. It's got $10 billion in operating cash flow, $12 billion in the bank. And if you believe that there is going to be a cyclical recovery at some time next year, while there has been a run-up in tech in 2013, one thing that has sat out is enterprise tech, your Oracles, IBMs, and Hewlett-Packard. And as we saw with the UPS debacle, a lot of companies have not really invested in growth. They've just bought back shares, and they've hoped that they're going to get by with efficiency. If 2014 is the year that companies start investing again in technology, I think it's going to be a good year for Hewlett-Packard. Not another 100% year, but a good year.
Although I'm wondering, one of the things that's been very good at is squeezing their costs down to practically nothing. It can't squeeze anymore, right? It's got to get more revenue than it has been receiving.
Yeah, very true, very true. And there is a leap of faith that you have to take there, as with any stock. But I think that Hewlett-Packard has got a decent foundation now. And like I said, I'm convinced that enterprise spending is going to happen in 2014 as the economy turns around.
Switching dramatically to biotech, a very hot sector. Celgene is your pick there. Now, they know how to work the FDA, by the way. They got very good contacts there. They know how to get their drugs online. What else do you like about this company?
Well, I mean, I like broadly the demographic trend that investors should get behind, which is boomers getting older. There's going to be bigger sales for healthcare companies, medical device companies. Celgene is actually a company that develops cancer cures. Huge growth business there. They're also very high margin drugs because while there's a small patient pool for these specific kinds of cancers, the margins are very good because the treatments themselves are intensive and they're pretty expensive. So Celgene's got a good product pipeline. They just made a good partnership in 2013 with a company called Oncomed. They're going to try to get some more cancer drugs up in the pipeline for next year and the years beyond that. So I like Celgene for a lot of reasons. And it's not just the narrative behind the baby boomer thing. If you look at the actual balance sheet of Celgene, since 2010, they've doubled their revenue and tripled their profits. And there's not a lot of companies that can say that. So it's not just the narrative of Celgene. I think the numbers are also there, too.
Jeff Reeves, InvestorPlace.com editor. Jeff, great to see you. Thanks for coming in.
Good to see you. Happy holidays. Dave.
Happy holidays to you, Cheryl.
All right.